How do you see that kind of influx of like young managers coming in who are just like the artist friends, like going deep into the music industry and dealing with labels?
I think that certain labels, you need to have experience when you're dealing with certain labels, and there are certain labels that will coax young managers through, you know, the period and help them. But there are certain places that I wouldn't want. If I was a young manager, there's certain things that you need to know, and there's certain labels that will definitely not help you in those areas. You know, they will take advantage of the fact that you're inexperienced. However, I think it's great that there's young artists coming through. I think it's very healthy. I think it's a really important transition. That, you know, for me, I lecture at Southampton Solent University. I'm on the MOBO Trust, which we look to find young managers, artists, etc., to help them. So I think it's very important to bring people through in that way. But it's very close to my heart to do it. But I also think that you have to be very careful, because, you know, over the years I've said, and I'll still continue to say it, that every band has a Dave, right? And no disrespect to Dave, but Dave is not an experienced manager, and the artist expects the same success as Rihanna or any other artist that's in the chart, whether it be Ed Sheeran, Rihanna, Craig David, whoever that may be. They expect the same success. So I'd be undermining managers at my level and at levels that have been doing the job for years if I was to say, yeah, you can just come into management and you're going to know the whole business. They're not going to. But if they're receptive, and if they work with people that are prepared to teach them and come into companies that can give them an infrastructure and help them, then they are the managers of the future. You know, they teach in Harvard Business School. It teaches, there's a lot of Porter's diamond shape for success, basically. And Porter's diamond shape basically says that if you have something that, one, is scalable, two, crosses all language barriers, and three, bars entry to anyone else coming in behind you, you have the perfect investable business, okay? Balance in your company, having the right balance, and having, you know, making sure that everything in social media is covered, and that, you know, look, people say, look, Colin, you don't understand social media. Guess what? I understand it, and I also understand commercialism. And sometimes, how do you commercialize something? It's all well and good, you know, knowing something and understanding it, but you've got to know how to commercialize it. And that's what my experience brings to people. It's all well and good, you know, saying, oh, well, the records are streaming well, and that's great. I mean, that's what streaming is, the biggest part of the income for record companies at the moment, and ultimately we'll get paid royalties through that. So absolutely, streaming is the future. But also there's opportunities that we're all looking at the moment that we have to monetize things. We have to be able to, you know, I know at the end of the day when I'm getting my PRS checks for artists, the neighbouring rights are, it's basically income that's not related to the authors of the music. So it's what broadcasters will pay, whereas you'll have PRS is paying for the songs. Neighbouring rights, in simple terms, is everything outside of that. So, and different countries will pay different fees for neighbouring rights for the use of music, not the author's part of it, but the people playing on it, the artist singing on it, and everything that's outside of the rights of publishing and PRS. Well, I think, you know, it's a very simple rule of thumb, is that from an artist's point of view, you should be putting 50% of their money aside. You know, if you put 50% or 45% aside, you're never going to be the wrong side of what the tax man wants. You're going to get money back, because there's lots of things you can claim back against tax, and, you know, the rates are 25 to 40%, and how you withdraw the money, etc., etc. So I'm more cautious. I'm happy to say, look, withhold 45% of it goes into a tax reserve account, and at the end of when you have paid the tax, you either carry that over, so you're paying less tax the next time, into an account, or you just take yourself a little nice tax-free dividend because, you know, things have come off tax. So I think it's very important to make that tax reserve. If you don't make that tax reserve for the artist, in essence, you're doing them a really disservice, because ultimately, if an artist is successful and has a massive tax bill, you're going to need to go and do a deal to get that money paid, because tax is no joke. They're not messing around with us. They're like, the HMRC is they're not playing games. You know what I mean? They're like, they want their money. And there's like a bit like, you've had your Big Mac and chips, and now we want to get paid. So, and if you don't, you've got a problem. So you would then be sent out as a manager to go or forced as a manager, shall I say, to go and do a deal. So I might have to give you Sony, Warner's, Universal, I may have to give you rights really cheap that I didn't really want to give away at the moment, because I need the money to go and pay the tax bill. So now I've just put my artist into a much longer, because nothing's for nothing. If I'm going to come to you and say, look, I need 100 grand, you're going to say, I need 3 albums. Now I might have not wanted to give you another album, but that's what you're going to want. That's the world of business. So it's a massive ramification to let an artist run a debt up. And by the same virtue, when new artists come in and they say, well, let's spend money on this and spend money on that, I'm like, well, we can do, but everything you spend from a management point of view is going to be recoupable when you get your advance. We're going to take the money back, because as a management business, that's what we do. So I don't want to spend to a point where you get an advance, then you've got no money left either. So it's very important to look after the financial elements of an artist. And if you don't look after the financial elements of the artist, you will end up ultimately having or being forced to do a deal that you don't want to do, that will not be in the artist's best interest. It's still expensive to break an artist on a global scale. It's always going to be debatable in your domestic territory. So if you're looking at it in the UK, of course, it's amazing. You're streaming music, you can put it up on Spotify, hopefully. You can get music on YouTube. That's all great. And actually you can build stuff up, and minimally you could hire yourself a radio plugger, a TV plugger, and you could do it, with a minimal spend and get a hit and then go. But if you want to sell records internationally, then, you've still got to spend money, quite frankly. And I think that, it can be done on a shoestring budget, but it can't be done outside of your domestic territory on a shoestring. You need a machine to help your music worldwide, and even more so today, because remember, when you put a record out today, everybody's got it around the world. So you're like, fuck, this record's out in every single country, how do I make that work? And unless you've got somebody out there that's propping it for you and going into radio and talking about it, and it's out, and it's like we spoke about earlier, it's not new music. By the time you get round to that country, it's not new music anymore, it's old music. So yes, you can get a real vibe going, and you could probably have a hit record, but you still do need a record company internationally to help you break an artist on a global scale. And those are the artists that Gem Music Group is interested in working with, international selling artists. For me, an artist that can't sell past Dover is not an artist that I would ever really want to sign here. Well, in simple terms, you can make yourself a millionaire. As I said, you can have a hit record. You can put it out yourself. You can go to Spotify. Spotify, like dealing with artists directly. And that's a great thing, and so does Apple. They like dealing with artists. So you can do it yourself in the UK, and you can make yourself a millionaire. You have a hit, you've done well. But to become a billionaire, to become a global selling artist, you need the bank. You need the major record company. That's so essential. And it's so important that you're with the right company for your music that can work globally. And that's where really what I'm saying is, in terms of our industry, you can make yourself a millionaire, but you'll never become a billionaire without the majors. And you'll never, majors, you'll never hear me knock majors, because they are the number one investors in new music. It's very hard to knock someone and I don't think they necessarily play by the Queensberry rules and pay us every penny that is due to the artist. But that's what we have audit rights for, and it's so important. And young managers really need to understand that the audit provision in your recording agreement is no joke, because when you've sat in a long meeting as a new manager and you get to this one of these last provisions, which is an audit provision, and you'll be like, yeah, whatever. Just so we know what the advance is, we know what the royalty is, we know how long we've got to be in this deal. Yeah, don't worry about the audit. Worry about the audit provision, because that is the provision that will ultimately see you get paid or not. So if you have a very short audit term, you'll have a problem with that. Or if you've got to pay huge sums of money to audit yourself, you might not be able to afford it. record company will it's a bit like litigation. To be, if you litigate, you've got to have a lot of money, so, or you've got to be completely around the bend, one or the other, or both. And the truth is, if you're going to audit and you're skint, they know that you've got a problem. So that clause is so important. So young managers, my advice is pay attention to that clause, because that's the clause that could end up buying your house. Every record company will have what they consider a default position with an audit clause. But the default position on auditing, especially now that we're looking at completely different forms of income revenue, we have to be very, very tight on audit, because there's not even deals in place with certain people that are playing music at the moment. So it's difficult to be able to say, oh, well, we're going to get this money. Well, we don't even know how much they're paying the record companies, because the record companies own our masters. We don't even know how much they're getting paid at the moment. So it's really important to make sure that you have the provisions to be able to get payments. Streaming, obviously, again, is going to be a completely different world when it comes to auditing. It's not going to be, I'm going to go to the accountant who's going to then look through all the royalty statements, and this is a different world of auditing we're getting into now. This is much more high tech. We don't want false information. We don't want false reporting. And if we don't want those sort of things, we definitely don't want false accounting. Definitely, we don't want false accounting.